Good morning and welcome to Charting the Markets on Wednesday, the 14th of June 2023. Let's begin by having a look at today's economic calendar. And at 1:30 p.m. we've got US PPI data out for May, and we expect factory gate inflation to slow down to 2.1% year on year compared to the previous month's reading of 2.3% year on year. And at 3:30 p.m. we've got US EIA crude oil inventories out, and then at 7 p.m. the all-important US Federal Reserve rate decision. And yesterday's softer inflation data that has led to expectations of no rate hikes being seen at this meeting later on this evening. And instead, market participants expect the Fed to hike its rates by 25 basis points, perhaps at the July meeting. So for today, we basically expect rates to stay at the current Fed funds rates of between 5 and 5.25%. But at 7:30 p.m. UK time, we have a press conference. And this is really important because it will give us clues on the future course of monetary policy, and much will hang on the language around the decision. And we will be focusing on whether this is still a pause, in that case it's viewed as a more dovish statement, or a skip, a more hawkish statement by the Fed. So basically, given the gains in the risk assets seen over the last few days, such as equity markets rallying very strongly, such fine-tuning in the Fed comments later on today in the language could prove to then increase volatility significantly. And this comes at a time where the record between the credit markets, which seem to be under stress at the moment, and the equity markets, and the volatility and the disparity between the two remains extremely high. That might be seen by some market players as a warning sign for equity markets potentially. But so far, everything seems to be very positive. If you look at Asia earlier this morning, we had the Nikkei, which soared again by 1.7% to fresh post-1990 highs. That's actually 33-year highs, as China's central bank unexpectedly reduced its short-term lending rate yesterday. And earlier today in the UK, we had GDP growing by 0.2% in April, in line with forecasts. And that also helped the FTSE 100 rise. And we can see this here on the daily financial bet. And you can see here we've held over the course of this week above the red line, the 200-day simple moving average at 7,545, and are now heading back up again towards the current June high at 7,655. So this is the next resistance area, together with the late May high at 7,660. And also the low from mid-May at 7,679. So yes, basically the whole area between 7,655 and 79 is key resistance for the FTSE 100, which would need to be taken out for the FTSE to recoup its recent losses and to be heading back up again. When you look at the German DAX 40 contract, it is looking much more perky. And here you can see we are currently regaining lots of lost ground and are within a whisker of testing the all-time record high we saw here on the daily financial bet in mid-May at 16,333. And we are on track to see our third consecutive day of gains with regards to the FTSE, the DAX 40. So unlike the FTSE, the DAX is really surging ahead, even though we have the FOMC meeting later on out tonight in the US, and also tomorrow the European Central Bank, where we expect to see a rate hike by 25 basis points, take the cash rate in Europe to 3.5%. So there's nothing really much to say. Above 16,333, there's minor psychological resistance for the DAX 40 at 16,500. Support really comes in around last week's high at 16,115. But beyond that, it's a bull market. It continues to go up. And basically, provided that no surprise is seen with regards to the rate decisions this week, and provided there are no black swans out there, further upside may well be in store short term. Having said that, though, it might be risky to jump onto the bandwagon here and actually go long at current levels, simply because if you look at the CNN Fear and Greed Index, this is now trading at 81, which means it's in extreme greed territory, and quite often this acts as a contrary indicator, such as the CBOE put-call ratio, which is also at an extreme. And when you have these sentiment indicators at extremes, quite often there can be a sharp reversal in the previous trend. So in this case, we could see a downside reversal potentially happening. So if you do go long, use pretty tight stop losses just in case that was going to be the case. And you can see here on the S&P 500, we've also now risen for 4 consecutive days, seem to be on track with the overnight session to have our 5th consecutive day of higher prices, and have actually taken out yesterday's high. But we have done so within this rising wedge formation. So in itself, it doesn't mean much, but if we were for some reason to revert and reverse lower and fall through this wedge support line here at 4,324, then it could perhaps lead to a fast decline back to the downtrend, to the uptrend line, which goes back to November of last year. So we'll have to see what happens here, but short term, clearly the trend is your friend. It is pointing higher, and further upside seems to be in store for equity markets, at least in the short term. Now, the FX markets have also been interesting of late, with euro dollar heading back up to a several-week high. And you can see this here on the daily financial bet. We have now risen above last week's highs and have yesterday hit 108.23, which is very close to the 10th of April low at 108.32, which was one of our upside targets in trading the trend and the trade of the week over the last few weeks. And here, if we were to take out that 10th of April low at 108.32, the next upside target is the orange line here, the 55-day simply moving average at 108.80. So you can see further upside being seen with the euro versus the US dollar, as the US dollar is basically depreciating slightly on those weaker than expected headline US inflation data that came out yesterday, where we see headline inflation in the US now being at 4%. And basically the euro also rising because market participants expect the ECB to hike its rates on Thursday at its monetary committee meeting to 3.5%, so by 25 basis points, whereas the Fed this evening is expected to not hike its rates and perhaps only do so in July of this year. So further upside short-term likely to be seen for the euro dollar. Here support comes in basically at the 2nd of June high at 107.79, where more or less this morning's low was made. And from a technical perspective, provided we stay above the last reaction low, that's to say the 12th of June low at 107.34, further upside is technically in store for us. Euro sterling is also interesting because yesterday we had some pretty good employment data out of the United Kingdom. Earlier today we had also GDP data out, with GDP rising 0.2% in the last month. Basically the UK seems to be doing all right, and we see a cable rising against the US dollar, but the story is different versus the euro. And as you can see here, we're heading back down again towards this week's low at 85.42 on that interest rate differential to do with the interest rates in the European Union and in the United Kingdom, where we also expect further rate hikes to be seen. So here the low at 85.42 has taken us back to levels last traded in August of 2022, and if we were to fall through this 85.42 low we made earlier this week, then the next downside target for me is the late August 2022 low at 84.08, and that seems to be the next downside target for us, provided we stay below the last reaction high, that is to say the 86.13 high made yesterday on the euro versus the British pound. Moving on to cable, as you can see here, the British pound continues to rally versus the US dollar and is heading back up again towards its May high at 126.79. So that's our next upside target for this currency pair. And above there, we have to go back to all the way April 2022, which would be the next upside target, probably taking us towards the 128 area. So if I move out and look at a weekly chart, perhaps we can see this better. We've got the 61.8 Fibonacci retracement of the entire 2021 to 2022 downtrend in the price of cable, and basically that comes in at 127.45. So that would be my next technical upside target for the British pound against the US dollar if we were to take out the May high at 126.79, and basically we remain bullish as long as we stay above the last reaction low, that is to say Monday's low at 124.88. Provided we stay above there, further upside is in store for cable as well. The weaker dollar has led to commodities, or some commodities at least, stabilizing. And we can also see the price of crude oil finding support. And on this daily financial bet of WTI, you can see here that we formed an inside day yesterday, or on the candlestick that is called a harami, and are breaking out of that to the upside today. So it's a potential buy signal here, having yesterday tested the late May low and held here as basically hopes of stronger demand from top importer China emerged as the Chinese central bank lowered a short-term lending rate. And because of that potential increased demand coming out of China, the oil price has once again recovered and is now heading back up again towards the April to June downtrend line around $72.25. Basically, over the last nearly 2 months now, we've been trading in the sideways trading range between $74.70 and $63.77. And further range trading within that range is likely to continue until we get to a point where we break out of that range. If a bullish breakout were to happen, that is to say, if we were to, over the next few days and weeks, rise and close on a daily closing basis above the late May high at $74.70. The next upside target would be the red line here, the 200-day simple moving average at $78.33, and then the psychological $80 mark. If, however, we were to once again fail at that resistance area and come back down and retest the current support area we've tested yesterday between $67.54 and 12 cents and fall through there, we would be heading back down again towards the March and also the May lows at $64.37, $63.77. But right now, short term, it looks as if we've once again held at support and are heading back up again. Moving on to the price of gold. The gold price has also been range trading for the last months and hasn't really done much. I mean, we tested, and that's why I like charts, this tentative uptrend line, or the support line, which is about 3 weeks old, yesterday and today at $1,940 per troy ounce, and are currently bouncing off that level. And we are now heading back up again towards the May to June downtrend line around $1,968. And as long as we stay below the early June high at $1,983, further sideways trading is really likely to be seen with regards to the price of gold. So what we're looking for here is a breakout of the sideways trading range. If we were to manage to rise above $1,983, then the $2,000 to $2,009, that is to say the late March high, that resistance area is likely to be retested. If, however, on the other hand, we were to fall through $1,933 at some stage, then it's quite possible that we could head back down again towards $1,900 or even lower. And that looks to me more likely still at the moment, simply because we've had that top forming in early May and since then have come off, then sideways traded. So I wouldn't be too surprised if we had another down at some stage, take us back down towards the red line here, the 200-day simply moving average at $1,845. But that is just at the moment a scenario, but it might as well just hold here and go back up again in the price of the precious metal. So watch the charts and see what they actually tell you to do in the future. Last but not least, I'd like to look at natural gas, and as you can see here on this daily financial bet, we basically have once again found support earlier this week on Monday at $2.25 or so, as natural gas prices are heading back up again on concerns that Europe will need to ship more gas to replenish its stocks. And this is taking us back to last week's high at $2.41. And if we were to manage to break above that resistance area, the next upside target would be the April high at $2.57. So short-term sideways trading, but with a bullish bias on natural gas prices. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.